Hey, good morning, small business owners. Welcome to Monday Morning Metrics. My name is Rebecca Bernick. I am the founder and big head of Office Heads. Office Heads is a financial management company located in Evanston, Illinois. Day in and day out, we do remote bookkeeping and accounting. The most fun part is we also do financial coaching so that our clients understand how to read financial reports and to use that really great information to operate their businesses. So today we're going to talk about being financially ready to pitch when you need capital. And I'll tell you, this is timely because I have had the absolute pleasure for the last 10 days of burning the midnight oil on getting financials ready for one of our clients to pitch to investors. It's been a very exciting process. And this is the part I love because it's strategic. It's not just about the numbers, it's strategic. So this conversation today, or this little coffee chat, is going to be more conceptual. If you have any questions or would like me in the future to actually drill down and show you some Excel magic on how to prepare yourselves, we'll do that some other time. But today we're just going to talk about being financially ready. So, but first of all, let's talk about needing access to capital. And of course, any small business at any given time is going to need some money. The old adage of it takes money to make money is absolutely true. And sometimes you can't bootstrap it and you need a little bit of help. So whether asking for capital from friends and family, which is like the first step of getting something off the ground, perhaps going to a bank and asking for a loan or line of credit, or as my clients are doing, is actually pitching to investors. So when you're pitching, and actually you can think about each of those steps as a pitch, because they want to know about who you are, what your passion is, what the mission of the business is, who are the people behind what you're trying to accomplish, why you need the money, and what that money is going to be used for. Now, when you're coming up with when you're trying to be financially ready, it's not just about the dollars that's in your Excel spreadsheet. If you're going to do this right, you have to ask yourself strategically, what am I going to use this money for? And what if this happens? And if this happens, I need this. And what we're talking about here is whether you're doing it on an annual basis for 12 months and looking at it as a budget for your next year, which you should be doing every year. Now we're doing a projected 5-year, because if you're going to go in and ask for money, you're going to say, hey, I need this money for the next 5 years, and this is what it's going to look like. This takes some strategic thinking and some strategic planning. So what we've been doing, and I'll walk you kind of through what we've been doing the last 10 days, which again, super exciting. We start with the actuals. So just like you would any year when you're doing your financial planning, you use the information, the actual information that you have, and you export it from your QuickBooks file. So this is the importance of good bookkeeping, good accounting, trusting your numbers, and have it be readable reports. So when you export to create a template, it's based on how you're operating currently and uses some actual numbers as a launch pad. So what we did, we created this template, and it was an export of a month-to-month P&L, but we did, every month for 5 years. Now, I'm a granular person, so I like to actually go every month, what's going to happen? If you're more of a larger picture person, you can do just 5 years and do it that way. But we did it month by month because things change month by month or change mid-year. So this template was based on our profit and loss statement, which we were accustomed to looking at because we look at it every single day. It's got every bit of information of how they were currently operating. Then we did some Excel magic and threw in the ability to toss in assumptions. How much is revenue going to increase? How does that impact your cost of goods? What is the margin of your cost of goods? Will it remain the same? Can you, as in economies of scale, take that X% of cost of goods when you're at this revenue? And will you be able to negotiate with your vendors to bring that down? I mean, we were talking about every single line item and what are the assumptions, and can those assumptions be tweaked, and what's it going to feel like in year 2, year 3, year 4, and when do we need to hire? Can we outsource instead of hire? Oh my goodness, what is, we're a virtual company. Will we always be a virtual company? If not, at what point in time do we need to lease? And going through an exercise of operating your company in your head on what it's going to feel like and how it's going to move, and then applying a dollar amount to that and plugging it in at the right time, you've got a 5-year, month by month snapshot of what your company is going to look like. Then, of course, you summarize those for every year and only show your investor a year-to-year change. But the importance of that month to month, every month you have a profit and loss, that net income at the bottom of every month for 5 years. So some of those months it's going to be a loss, and some of those months it's going to be a profit. And the reason it's going to be a loss is because, okay, this is why you need money. I need to hire somebody. I need money to be able to hire. I need to do some marketing. I need to have a marketing push. You enter that into your model, and of course, you know, the revenue for that comes later. And that's why you're investing in your company. And this is why, and this is how we create a cash flow. So you add all the losses and you add the profits, and it's going to show where you're going to dip below the line. So then you say, okay, that's where I see from month to month that I need some money right around here. I'm going to need $100,000, and that's going to last me this many months. And that's what some are called the burn rate. But then you're going to need another $100,000, and that's going to last me another 8 months. And then I need another $100,000. And this is also increasing my revenue, but this is when I need to I need to invest a little bit more. So this is so exciting. This is not just about numbers in a spreadsheet. It's about living through the next 5 years of your business and understanding what that's going to feel like, applying dollars to that, and then knowing exactly how much you need at which point in the next 5-year future for you to get to, you know, great increase in revenue and a bottom line in 5 years, really good profitability. So again, this is conceptual, but it really does start with the information in your current QuickBooks file that you use as a baseline, and then you strategically and intelligently plan and then apply dollars to it. Then, of course, a passionate entrepreneur has a great story of who they are, what they're trying to accomplish. And then the rest should be easy when you get in front of those investors and do your pitch, because you believe in your company, you believe in your mission and your vision, and you know your numbers and can speak to them and handle any question that they might have. It's exciting. So there you go, talking about being financially prepared, being able to speak to your numbers in a 5-year plan to pitch to investors and really feel comfortable. And even if you're not pitching, you're pitching to vendors and other people and other business owners when you're networking. So knowing your numbers isn't only important for when you're doing your pitch, when you're asking for capital, but it's good every month that you're in operations to truly know your numbers. So thanks for joining me this morning on Monday Morning Metrics. I hope you enjoy all of the topics that we've been discussing. Now, there is a comment box. I like to talk about tons of things about business finance and business operations. So if there's anything that you in particular would like to discuss, comment below. I'll bring it up in the future Monday Morning Metric. It would be my absolute pleasure. In the meantime, I'll see you next week, and have a great and profitable week.